Good morning, everyone, and welcome to the Axis Securities Morning Podcast. Today is Tuesday, 24th December, and the time is 7 a.m. US stocks rose at the start of what is a holiday-shortened week as the government averted a potential shutdown. The S&P 500 rallied 0.7%, the Nasdaq finished 1% up, and the Dow added 0.2%. After more than 50 record highs this year, both the S&P and the Nasdaq are on pace to finish December with their second consecutive yearly advance, up 25% and 28% respectively. Meanwhile, US consumer confidence slumped for the first time in 3 months as uncertainty around Trump's administrative policies emerged. In movers, the dollar index rose 0.4%, the 10-year yield gained 6 basis points, Bitcoin fell for the fifth day in 6, the VIX dropped for the third straight day and ended below 17, gold fell 0.4%, and oil remained under $70 for the third straight session. At home, the rupee slumped to a new record of 85.12 on month-end demand for dollars from importers. Meanwhile, the December rate policy minutes showed that the decision to hold rates was driven by the belief that inflation would possibly remain upside sticky and that the growth slowdown was unlikely to linger on. Talking stocks, the Nifty rose for the first day in 6, finishing 0.7% higher but off its session highs. The India VIX ended 1.6 points down, the biggest point-based drop since August 7th. All but two of the main NSE sectors finished in the green, with realty gaining 1.5% and media ending 0.4% down. Breadth was positive as 37 Nifty stocks rose and 13 fell. JSW Steel was the best performer as it rose 2.2%, while Hero MotoCorp was the biggest loser, dropping 1.6%. Mid and small caps underperformed on the day. In yesterday's podcast, we had highlighted 23,850 to 24,000 as an upside hurdle area, and this is where the market reversed from. So this zone continues to remain an important barrier on the upside. Yesterday's candle formed a bullish spinning top formation. That also becomes a bullish harami when Friday's candle is taken into account, so its high and low will dictate the next tactical move for the benchmark. Support lies at 23,650 followed by the 23,400 to 23,500 area. Talking flows, foreigners withdrew near 1,900 crores on Friday, the fourth straight daily outflow as per CDSL data. On a month-to-date basis, the inflow number remains around 23,000 crores. On to derivatives, the Nifty's put-call ratio went from 0.8 to 0.84, while that of the bank Nifty's rose to 0.59 from 0.52. About 11 lakh contracts of Nifty calls and 12 lakh puts were added, and implied volatility slumped over 2.3 percentage points, which means market participants are bracing for the Nifty to be stuck in a range. The FII index futures long-short ratio ticked marginally higher. Looking at options concentration for the monthly contract that expires Thursday, the trackable range continues to sit between 23,500 and 24,000. Meanwhile, implied volatility for nearby OTM calls dropped more than it fell for similar distance OTM puts, which means tactical bulls aren't confident that any rally will stick. Looking at sentiment via net activity in index calls and puts, foreigners and prop traders were bullish while retail was bearish. Coming to index futures, foreigners and retail traders were bearish while prop traders were bullish. Looking ahead, the GIFT Nifty was flat along with Asian equities. Talking stocks, Apollo Tyres, Page Industries and HBL Power were at horizontal support, while Indraprastha Gas and Network 18 were at horizontal resistance. DOMS, Anand Rathi and IRFC were at trendline support, while Apar Industries and Aptus were at trendline resistance. Talking key moving averages, 35%, 30% and 60% of stocks were above their respective 50-day, 100-day and 200-day moving averages. The numbers are higher than Friday's readings given yesterday's rally. Richmond Fed manufacturing data from the US will be released today. That's a wrap on today's podcast. Have a nice Tuesday and we wish you and your families a Merry Christmas. See you Thursday.